Poonam, I want to start with you, and let's start off here with the online business, the e-commerce business here. It's holding up pretty strong.
Yeah, absolutely. They did actually pretty well, much better than we expected, especially in the face of inflation and thoughts from other company leaders that have said that consumer spending has actually slowed recently. So quite promising that Amazon is still able to deliver not just, for online, which is 1P, but also 3P. 3P was very encouraging, up 20%, which came in well ahead of estimates and just shows that more people need to move online and Amazon catches the eyeballs.
Is there any sense here that promotions had anything to do with the growth that we saw in that quarter?
Yes and no. I mean, it got leaner in terms of promotions from a 4Q standpoint. So inventory in the retail landscape has rationalized a little. There's still more to go, but we don't think it's promotions driving that increase. We think it is demand, and consumers are flocking to Amazon for their day-to-day needs.
People are spending, people continue to spend, and it looks like companies are spending on cloud services as well. Anurag Rana joining us right now. Anurag, when you look at the AWS business, sales growth was expected to slow, and it has been slowing the last couple of quarters, but we're still looking at double-digit growth here. So it's not like this is a business that's underperforming. It's just coming off the best levels.
Yeah. So the consensus was around 14% growth in constant currency. They came at 16. That's a very good number given where we are. And Microsoft also had a similar, I would say, improvement in growth rate. Now, when we look at, guidance is far more important before we call a bottom to the cloud market. I think that really today is going to be the big day where they go out and tell how clients are doing and whether they are buying more services or not. So I think that's really the key at this point.
So we were talking earlier about whether Amazon is a market leader here when it comes to cloud computing, or whether it's losing some ground to the likes of Microsoft or Alphabet.
Well, it hasn't lost in the last 5 years. So we don't think they're going to lose. It is too good of a service. And the others will grow too. But I think it's a mix of higher end services.
In conversation right now with Anurag Rana and Poonam Goyal over at Bloomberg Intelligence, a focus on Amazon. I want to bring you some breaking news. Snap earnings crossing the wire, shares down 20% here. 1Q revenue coming in slightly below street estimates. Street was looking for $1 billion. They got about $989 million out of the company in the quarter. The company also reporting adjusted EPS of about 1 cent. The street was actually looking for a loss of about 5. So it does look like a beat there. Daily active users coming in at 383. The street was looking for, 383. Not quite seeing guidance here in the numbers, but you're seeing the share reaction there. We also did Pinterest just a little while ago as well, and those shares are down about 8% here. They did beat on some of the key numbers here, but a big focus here on some of the user growth, or rather the lack thereof. Interesting to see a down day on those two stocks on a day where we saw Meta Platforms just outperform the market by a mile. You can go back to Amazon here. Anurag Rana and Poonam Goyal are still with us. And Poonam, I'll turn back to you here. What about the cost-cutting story? Because Amazon talked a lot about this in the previous earnings cycle here. We know that has actually helped to sort of preserve margins here. Do you expect, or do you think they need to do more on that front?
I don't think they need to do too much more right now. But should we enter a deep recession, I think that is definitely on the table. But at this point, if you look at their guidance, it's pretty good on the margin side. And the margins did expand nicely this quarter. So we do think that they've done a lot of what they needed to do. In terms of layoffs, that's where most of the cost savings came from. They did a pretty big round just recently, which involved a lot of AWS layoffs. So we think right now it's just executing on that front and really driving efficiency in what they have, especially their distribution centers.
Anurag, how focused is this company right now? We talk about it being a lot more diverse than what it was a few years ago. Some would say that's a bad thing, but we have also seen time and time again that's actually helped.
So whenever you have an economic slowdown, they do go back and try to rationalize some of the costs. Now, when you look at AWS, which drives most of the margins of the company, about, I would say, 16, 18 months ago, their margins were around the 30% mark. They are at 24%. And I think that these cost cuts will help on the next few quarters. And when the demand comes back, we expect margins to climb back above 30%, back then.
When demand comes back, will they need to hire back a lot of the workers they laid off, or will they be running just a leaner ship?
They will have to hire it, but probably not at the same pace as the revenue growth.
Okay, to maintain those profit margins, that makes sense. What could the company say that might change the stock market reaction right now? We're seeing gains of about 10% after hours trading.
I mean, they say cloud is falling off the cliff. I mean, that would do it.
Unlikely, though.
I hope they don't say that. I think they'd be a little bit more measured, right?
No, but I think if you look at the comments, I mean, it seems okay, to be honest. I mean, if you look at what ServiceNow did, we'll look at what Microsoft did. I mean, I think I will confess publicly that I was a lot more pessimistic going into this earnings season, and everybody has surprised me on the upside.